Hey guys, it's Friday, and I really wasn't planning on making a video today since I just made a video yesterday, but I was thinking about some things, and there's a couple of interesting threads that I can put together that link yesterday and today, and I think it'll be something that can be fairly educational for a lot of people, because I'll be able to point a few things out. Okay, so first of all, yesterday I was in and out very quickly, and I went long, and I did all of my trading within the first 30 minutes of the day. So you'll remember that I had just a very small gain, like a $200 and something gain yesterday. I was in and out within 30 minutes. And today, I'm going to put up my P&L in a second. I traded once again just the SPY and the Qs, made a little over $1,100 today, just over 10% P&L for $1,100 gain. This time I went short, and today I traded with a little bit more size than I traded yesterday. Yesterday I traded very, very small size. I think I was in like 5 contracts yesterday. Today I traded a little bit more size, still not anywhere near what I usually trade, but I had a little bit more confidence in the fact that we were going to fall most of the day today, which we did. And so that brings me to another reason I wanted to make this video, to connect it to yesterday's video. And I'm going to do a screen share in a minute to explain a few of these things in more detail and do it in a way that's going to be easier for everybody to understand, because I'll be able to put the charts up on the screen. But basically, one of the reasons why I got in and out so quickly yesterday, like I said on my last video, I really had no confidence in what was going to happen yesterday. I was just very trepidatious about what the action was going to do. Today, this morning, I was much more confident in what the action was going to do, and I was confident that we were going to fall today. One of the reasons was that weak jobs report that came out this morning, and another reason was because of what I saw on the charts. And so, like I always say, you need to combine news with what you actually see on the chart. You never want to just simply read any type of a news story or read anything by any pundit and just trade based on what some rando says online. You don't want to do that. But what you do want to do is take any sort of relevant information. Now, a jobs report is definitely a lot more relevant than just some commentator saying they think something's going to happen. So you take the jobs report and then you combine it with what you see on the chart, and then you make your move based on that. And that's what I did today. I was fairly confident that we were going to fall today, so I was able to get in with a little bit more size than yesterday, and I flipped. Yesterday I was going long, today I was going short, proving that my strategy does not rely on simply going long or going short. Now, I definitely have made a lot more money going long than I've made going short. And that's because, over the last years combined, I've just made a lot more long trades than short trades. But that certainly doesn't mean that you can't make money going short. You can definitely make money going short. The reason that I like to look for long entries over short entries is because over time, the general trend, as you look at a longer time frame, generally the market goes up. It's sort of like real estate. Whereas, if you buy a house and you own your house for 30 years, you might lose value on your house in any particular 6-month time frame or even a year time frame, but on a 30-year time frame, you're not going to lose money owning property. And so it's kind of the same thing with the stock market. Over time, you almost always see an upwards trajectory. And so that's why I can feel a little bit more confident when we are in upwards trending markets. I can feel a little more confidence that the market will indeed continue to trend upwards. Whereas when we're in a downward trending market, I'm always a little bit more leery of, okay, well, is this the bottom? Are we suddenly going to reverse and everybody is right now going to decide to buy the dip and then suddenly that trend is done and we've reversed? So that's why I'm always a bit more suspicious of going short than I am of going long. But there are definitely times when you can feel more confident going short. And today is one of those days, and that's why I took advantage of it. And I had success, making $1,000 in about an hour today. So let's get into the screen share, and I'm gonna show you exactly what I saw pre-market, and I'm gonna tell you why I was confident about getting in where I did get in and what I saw on the charts. Okay, so here we are taking a look at the 1-minute chart on the triple Q over here on the left and the SPY right here on the right. And a couple of things will jump out at you right away. So first of all, if you've been paying attention, we fell out extremely hard yesterday, even harder than we fell out today. So I made my money yesterday right here in the first half hour of the day. Obviously, in hindsight, it would have been much better to wait and then go short when price broke below this 200 and just ride it all the way down. I mean, it would have been real easy to make thousands upon thousands of dollars yesterday, even trading with a very small size, had I done this. But I got in and got out quickly and then went about my day yesterday doing other things. So I didn't even pay any attention to that. But that's besides the point. Hindsight's always 20/20. The point is, let's make the best decisions right now. And so that takes us to pre-market from last night into this morning. The one thing that you'll notice immediately is we're just riding below this 200 EMA all night long. I mean, it comes up, touches, rejects, comes up, touches, rejects, touches, rejects. It's why I keep on saying over and over and over again, the 200 EMA is literally the most important single indicator that I use on my charts. If I could only have one indicator to look at every day, it would be the 200 EMA. Over here on the SPY, you can see exactly the same thing. We're playing below the 200 EMA, just bounces off, comes up just for a second, breaks above it, comes up and breaks above it just for a second again. So pretty much what that means is when I looked this morning at yesterday's action plus what we were doing pre-market plus the weak jobs report that happened right before the open, I had a very strong feeling we were going to be pretty negative on the day. And so what I did, now let's zoom in a little bit more. Okay, so what I did was right when I saw this candle, like 3 minutes into the open, I got in with a little bit of size, not too much, just kind of got my starter trade going. Well, it reversed on me almost a couple minutes later, but I didn't freak out because I thought, all right, well, we're in the first few minutes. It's always real volatile in the first couple of minutes of the day. So even though I had my idea, I wasn't going to stop out simply because it broke up, within like 5 to 10 minutes of the beginning of the day. Now, if we had come up and broken up above this low of day yesterday. Here's the low of day yesterday. This was the high of day yesterday. Had we come up above this, that would have been my point where I said, okay, I was wrong. We actually have reversed and now it's going to be an up day. But I was still fairly confident it was going to be a down day today. So I stayed in. And then as soon as we came back below the 200 and we broke, really when we broke below the 50 has been below the 200 all day. But when we broke back below the 50, can't really see that very good. Like right here, I added in again, and then I really just was closing out my contracts for, the next 30 minutes or so. So I just closed out my contracts as we were falling right through this area. I closed out a majority of my position right here. Over on SPY, you can kind of see the same thing happening. Opened up, fell out, got in with a small starter position right here. It reversed on me, but I wasn't worried about it. Waited until we came back down, added in a little more, and then I was closing out on this really big dramatic dropout here. And then I closed out the majority of my positions right in this area. So I was basically out everything by about 9:42. Yeah, 9:42. I got out all my last contracts. I closed them at 9:42. You see this big green candle right there? And then over here on SPY, you can see the same thing, this big green candle after we had fallen out and then fallen out a little bit more. Since this candle was so big right here, engulfing this red candle, I figured, I don't want to push my luck. I already made a lot of money this morning in a short period of time. So even though I had a lot of confidence that we were going to do what this was right here at the very beginning of the day, when I saw this big green candle on both the Qs and the SPY at 9:42, I thought, I don't want to push my luck. I want to take my wins where they are. Don't get greedy. Already made a bunch of money. Just be happy, close out the position, and go about the rest of your day. So that's what I did. And, just once again, the power of the trend and the EMAs and being able to read price action and look at the individual candlesticks in relation to where they sit against your EMAs. And, when you see everything lining up and you have confidence in the trade, go ahead and take the trade. It's as simple as that. Okay, so the last thing that I wanted to reiterate before we wrap up this video, really the main kind of conceptual idea behind this video, is to remind you to scale into your trades based on how much confidence you have with the idea. If you have no confidence in an idea, don't trade. If you have a small amount of confidence in your idea, you can trade a small size. And if you have a larger amount of confidence in your idea, then it's okay to trade a larger amount of contracts. It's as simple as that. No confidence, no trade. Lots of confidence, go ahead and trade with large size. A little bit of confidence, maybe you can get in, but just be very careful. And that's it. Have a good weekend. Hope you had a green week, and good luck next week. Take care, everybody.